Welcome to the Deep Dive, where we help you get informed fast.
Today, we're digging into Ex Vivo Perfusion. They're right at the forefront of organ preservation tech.
Yeah, and their latest earnings call, the one from July 11th for Q2 FY25, definitely made some waves.
Oh, absolutely. Not quiet waves either. The market really reacted.
So we're going to break down that call for you, pull out the key details, and figure out what's really going on.
This quarter, well, it wasn't just a miss. It feels like a real stress test on their whole growth story, doesn't it?
It does. It forced the market to kind of step back and rethink things, at least in the short term.
The numbers really told a story. A pretty tough one.
Okay, so let's get right to it. For everyone following this space, what were those numbers that caused such a stir? Let's get that snapshot.
Right. So for Q2 2025, Ex Vivo reported revenue of SEK 178 million.
Okay. And how did that stack up against expectations?
Well, that was quite a bit lower than the consensus, which was hovering around SEK 223 million. So a noticeable miss on the top line.
And what about the bottom line, earnings per share?
Same story there, really. Diluted EPS came in at SEK 0.05. The street was looking for more like SEK 0.10.
So yeah, a material miss on both fronts then. That's definitely a shift after their stronger Q1.
It really is. And, digging a bit deeper, while their abdominal segment actually looks pretty healthy, up 19% growth.
Which is good to see.
Yeah, it is. But it just wasn't enough to make up for a pretty significant slide in their main thoracic business. That was down 19%.
Oof. So the core business took a hit.
Exactly. And that pressure flowed through to profitability, too. The adjusted EBITDA margin, which, gives a sense of core operational profit.
Right.
That dropped to 13%. Compare that to 24% this time last year.
Wow. Okay. So you can see why the market reacted so strongly.
Definitely. A pretty intense reaction was almost guaranteed with numbers like these.
So now that we have the numbers, let's get to the why. How did the management team, CEO Christopher Rosenblad, explain this weakness? What was their take?
Well, their main explanation centered on temporary destocking in the U.S.
Destocking, so customers using up existing inventory instead of buying new.
Precisely. They pointed to a few things.
Yeah.
A lung market that wasn't growing as fast as they hoped, a lack of heart sales versus what they expected.
Okay.
And also, the weaker U.S. dollar didn't help. That actually knocked about 6% off sales due to the currency conversion.
Got it. So this destocking, how much did that actually impact sales? Did they quantify it?
They did. They mentioned it hit their largest U.S. customer particularly hard. Sales to that specific account were down roughly 40% compared to last year's Q2.
40%. That's significant.
Yeah, it translates to about $1.5 million in impact just from that one customer's destocking.
Wow. But they see this as temporary.
That's the message. They stated they don't expect more inventory reduction if the market kind of gets back to normal growth patterns.
And they're sticking to their longer-term outlook.
Seems so. They reiterated that they still see a clear path to double-digit growth in 2026. They're banking on new trials and upcoming product launches to drive that.
Okay, that's quite the forecast after this quarter. Let's unpack that thoracic business, more lungs and heart. What's the story beneath that 19% decline?
Right. So for lungs, overall sales were down 10% in local currencies. That's largely because of that big customer destocking we just talked about.
But is there more to it?
Yeah.
How did the rest of the lung business do?
Actually, yes. If you exclude that one specific customer, U.S. lung sales were actually up a strong 26%.
26%. Okay, that's a very different picture.
It is. And sales of their EVLP kits, those are the consumables for lung perfusion, they grew 21%. So there's underlying demand, it seems.
That suggests some resilience then, outside of that one major headwind. Are they making progress adding new customers to maybe spread that risk?
They highlighted that, yeah. They acquired 4 new XPS customers. Those are the machines in the U.S. just in the first half of 2025.
And how does that compare to usual?
Well, historically, they've added maybe 2 new accounts per year. So 4 in 6 months is, a definite step up.
Okay, so they're accelerating customer acquisition.
Seems like it. They also mentioned a pretty solid pipeline of potential new accounts over the next 6 to 9 months. And interest from hospitals wanting to start their own in-house EVLP programs is apparently higher than ever.
So how are they managing that increased interest? Are they staffing up?
They are. They're investing more in customer-facing roles, more EVLP expertise, especially down in the south and west regions of the U.S. where things are growing.
Makes sense. Did they give any other reasons for the general lung market slowdown beyond the destocking?
They mentioned a couple of things. A bit of fatigue, maybe, after a couple of years of really high growth. Also, resource constraints at some centers, changes in hospital economics, even things like NIH grant cuts impacting trials.
Interesting.
And one other point, some clinics that were really ambitious maybe work through their waiting lists faster, which can kind of paradoxically make it harder to match donors and recipients temporarily.
Right, those broader market dynamics are always tricky. Okay, let's switch to the other part of thoracic. Heart sales were way down there too. What happened?
Yeah, heart sales were only SEK 3 million compared to SEK 19 million last year.
Big difference. Why such a drop?
Mostly down to tough comparisons. Last year's number included significant revenue from trials, basically. Big one-off purchases for studies that aren't repeating this year.
Ah, okay, so not necessarily a drop in underlying demand for the future commercial product.
Exactly. And they expect this comparison issue to continue impacting Q3 and Q4 numbers as well. But importantly, the data coming out on the heart side looks really strong.
Oh, what data is that?
The European heart study they presented back in April at ISHLT, it showed, get this, a 76% reduction in severe primary graft dysfunction, PGD.
76% reduction in PGD.
Yeah.
That's remarkable. PGD is a major complication, right?
It's a huge deal. And reducing it that much led to better patient survival too. 92% survival in the Exevo group versus 86% in the control group. And this wasn't just in marginal hearts, it was in standard criteria donor hearts.
Wow, that sounds like it could be game-changing. What about using it with the DCD hearts donation after a circulatory death?
They're working on that too. Early results using their heart box for DCD procurement look really promising. There's a European trial running now, already enrolled more than half its patients. They think this could become the new gold standard for DCD heart transplant.
Okay, so the clinical side looks very positive. What about getting it to market? Regulatory status.
In Europe, approval is basically waiting on just one medical agency to finish its review. Apparently that agency is just overloaded right now, but Ex Vivo says they're ready to launch as soon as they get the green light.
And in the U.S.?
Good news there too. The U.S. Continuous Access Protocol, the CAP that's been approved. It allows early patient access before full market approval. They expect to enroll the first patients under that CAP very soon, like this quarter, Q3 2025.
Okay, so lots happening on the heart front, potentially big catalysts coming up. Let's shift gears to the abdominal business. That seemed like the brighter spot this quarter.
It definitely was. The liver segment kept up its strength. Sales grew 28% in local currencies.
Nice.
Even stronger in their main European markets, up 32%. They installed 6 new liver assist machines in Western Europe just this year.
And what about getting paid for it?
Right.
Reimbursement.
They're making progress there, kind of country by country in Europe. France and the Netherlands are sorted. They're working on Germany, Italy, Belgium, the UK.
And the U.S. market for liver.
That's moving forward too. The Liver Assist device got FDA Breakthrough Device designation, which can help speed things up. And they're aiming to get the first patient enrolled in their big U.S. liver PMA trial by the end of this quarter, Q3.
PMA, that's the big one for approval, right?
That's the most rigorous path, yeah. So positive steps there.
Okay. And the kidney segment within abdominal.
Kidney sales were down slightly, about 2%, but that was mainly because they sold a lot of machines last year, making the comparison tough.
Ah, another comparison issue.
Right. But the important part is that the use of the Kidney Assist disposables, the recurring revenue part, is actually increasing. It grew 47% in the U.S.
Okay, so the installed base is starting to generate more recurring revenue. That's a positive sign.
Exactly. It shows the model is working.
All right, let's touch on their services business and maybe some other operational stuff. Anything stand out?
Well, the organ recovery service part saw activity dip by 19%.
Okay.
But interestingly, there's growing interest in something called NRP, normothermic regional perfusion. It's a technique for procuring hearts, and organ procurement organizations, the OPOs in the U.S., are getting keen on it.
NRP, why is that significant?
SVVO sees OPOs as really important future customers, especially for boosting lung transplant numbers long term. They have a pilot program for NRP underway and think they can support it broadly within about a year.
So another potential growth avenue there.
Yeah.
How do the overall financials look beyond the headline numbers? Margins, cash flow.
Gross margin held up well, actually, strong and stable at 74%.
That's good.
Operating cash flow in Q2 was positive, SEK 9 million, but they are still investing heavily.
Right, you mentioned the trials and inventory build for the heart launch.
Yeah, investments were SEK 72 million in the quarter. To cover that working capital need, they did draw down on their revolving credit facility, borrowed about EUR 8 million in Q2.
So burning cash still due to the investments. When do they expect that to turn around?
Management's view is that operating cash flow will improve, and they expect free cash flow to turn positive once that U.S. heart launch really gets going and starts generating revenue.
And what about spending? Are they cutting costs anywhere?
They talked about reprioritizing OpEx. They'll keep investing in the sales and commercial side where they see the best return right now. But things like back-end operations, R&D, admin, they feel those areas are basically right-sized for now.
Okay. Any other financial details we should know?
One important point for future profitability: once they get the European CE mark for the heart product, about SEK 200 million in accumulated development and trial costs will start being amortized, basically spread out over 10 years.
So instead of hitting the profit and loss statement all at once.
Exactly. It means about SEK 20 million per year or SEK 5 million per quarter will be recognized as an expense from that capitalized R&D. It smooths out the impact.
Got it. That'll help the reported bottom line over time. So despite this Q2 stumble, what's the big picture view from management? Is the long-term story still the same?
Absolutely. They were very clear. The long-term thesis is unchanged. They hammered home the point that the demand for transplants is massive, maybe 10 times higher than the current supply.
A huge unmet need.
Huge. And machine perfusion, like their technology, is proven to increase the number of usable organs. Plus, as we saw with their heart data, it can actually improve patient survival.
And the DCD organ pool is growing.
Rapidly. And machine perfusion is seen as crucial for making the most of those DCD organs. Their service model, covering both standard and DCD organs, is seen as a key long-term growth driver.
So they still feel they have a unique platform.
Very much so. Unique, proven platform. And they're sticking to their strategy, their mission, really, of trying to ensure no one dies waiting for an organ.
Okay, so short-term pain, but the long-term narrative remains compelling from their perspective. Let's connect this back now for you, the listener. What did this quarter and this call mean in the market context?
Well, as we mentioned, the reaction was immediate and harsh. The company's ADR, that's how U.S. investors trade it, it dropped over 30% on the day of the announcement, July 11th.
30%? Wow. Just wiped out the year's gains.
Completely. It hit 18-month lows. And remember, the stock had been up about 25% year-to-date before this, partly thanks to that strong Q1 and some positive FDA news. Trading volume was also exceptionally high that day.
So it really suggests investors took this miss, and maybe the cautious comments about comparisons as a sign that this, previously high-flying transplant story might be hitting a rough patch, maybe even a cyclical downturn.
That seems to be the interpretation, yes. A lot of the analysts, the sell-side desks, immediately flagged the risk that estimates might need to be cut further, even if they still like the company long-term.
And how did it compare to other similar companies?
Other Swedish med tech stocks were down a bit too, but nowhere near as much as Uvio. That really signals the market's concerns were very specific to Isvivio's results this quarter.
So the key thing for listeners to grasp here is this tension, isn't it? You've got these short-term problems, the destocking, the regulatory waiting game.
Right, versus this very compelling long-term story. The huge organ demand, the strong clinical data, the upcoming product launches.
And the big question for the market now is all about timing, right? When will things recover? And does the current lower stock price reflect just a temporary issue or something more fundamental?
That's the million-dollar question, or maybe the multi-million SEK question here. It's a critical distinction for anyone looking at this company.
Okay, now let's shift to our final segment, and let's be absolutely crystal clear. This next bit is not financial advice.
Okay, definitely not. It's purely illustrative, just a thought experiment to get you thinking about possibilities.
Right. Given that huge stock drop, but also keeping in mind that underlying long-term potential we just discussed. Here's a hypothetical thought for someone with a really contrarian view.
Yeah, something maybe a little out there, but, potentially plausible down the line. An outrageous but plausible idea.
Exactly. So one might think about whether this massive pullback could offer a unique entry point, maybe structuring a trade that could benefit if there's a significant recovery over, say, the next couple of years.
Okay, how might that look, hypothetically?
Well, one could consider something like a long position in out-of-the-money call options on XVIVO Perfusion. The ticker is XVIPF. And you'd look at options with an expiry date way out, maybe late 2026 or even early 2027.
Okay, so let's break that down. What's the outrageous part of that idea?
The outrageous part is you're making a pretty bold bet here. You're betting on a full recovery, maybe even a paradigm shift for the company after this really brutal quarter and that 30% stock plunge. You'd be betting against the current negative sentiment and assuming the market fully embraces that long-term story again.
High risk, clearly. So what makes it plausible, hypothetically speaking?
The plausible angle rests on a few things we discussed.
Yeah.
Management did reiterate that forecast for double-digit growth in 2026.
Yeah.
You've got those potentially major catalysts coming up, the European heart approval finally landing, the U.S. heart CAP-P ramping up, that U.S. liver PMA trial starting soon.
Right.
Those product launches are key.
They really are. Plus, you have the strong clinical data, especially on heart survival, and the fact that they are still adding new EVLP customers steadily. That points to underlying demand and that the tech works.
So the thinking goes, if the destocking is temporary, like management says, and if these big launches start to gain traction,
then the stock could, theoretically, see a significant rebound from these 18-month lows.
And using a longer dated option, like out to 2026 or 2027, gives that thesis time to potentially play out. Time for the regulatory hurdles to clear, for sales to ramp up, for the market to perhaps appreciate the DCD opportunity more fully.
It's definitely a high-risk, potentially high-reward scenario. You're betting that the fundamental story wins out over the current short-term noise. But again, purely hypothetical.
Absolutely. Just food for thought.
Yeah.
So let's wrap up our deep dive on XVO Perfusion's Q2. It was, without a doubt, a tough quarter.
Yeah.
Led to a pretty sharp market reaction.
Yeah, the temporary destocking, those tough comparisons from trial revenues last year, they definitely took a toll on the numbers.
But as we've discussed, underneath those headwinds, the company is still pushing forward on its key long-term goals, preparing for those major heart launches in Europe and the U.S.
Kicking off the U.S. liver trial, still adding new EVLP customers, the core strategic initiatives seem to be moving ahead.
Which leaves us, and you, with a really interesting question to ponder. Does this big pullback signal a real fundamental problem in Xevio's growth story? Or could it actually be a unique opportunity for patient investors who believe in that massive unmet need for organs and the company's technology?
It's the central question right now. And as always, please remember, everything we've talked about today is just for informational purposes. It is absolutely not financial advice.
Please do your own research, consider your own circumstances, and reach your own conclusions. Thanks for joining us on The Deep Dive.